KR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
So will Washington pull off the ultimate failure with the debt ceiling? Today we're going to take a look. Stay tuned for Prudent Money. Afternoon, this is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. I do have a line open if you'd like to call in. The number to call is 1-877-913-5357, 1-877-913-5357. You can also go to the website at www.prudentmoney.com. Well, I would tell you it's the brand new website. Go check it out. We've updated everything and made it a little bit easier to use. A lot of resources on the web, and there is on the website. And there is a section that's a question and answer. Send me a question, and I will send you an answer. It's that simple. And if you got a comment you want to make it, that's the place to go. And I love to get those questions and comments from you, and I love to be a help. That's what we do on Prudent Money. We help you rethink your beliefs about money. Now, it's about thinking differently because everyone wants you to believe that they've got the answer. When no one really has the answer, it's all completely about opinions. I could tell you the way that I think about something, but at the end of the day, I can't tell you whether I'm right or wrong. I can just tell you it's an opinion. Only time will tell us what makes the most sense. But the most important thing that you can do is rethinking your beliefs about money through the lens of prudent stewardship. And so that is the main thing and the main objective and what we talk about on Prudent Money. 1-877-913-5357. Well, at the beginning of the program, my opening line was, will Washington pull off the ultimate failure with the debt ceiling? Now, I'm getting a lot of questions about this subject of the debt ceiling, and a lot of it is very stressful questions, and deservedly so. Is my Social Security payment going to make it in the mail? Am I going to continue to receive this benefit? Am I going to get laid off? I mean, there's a lot riding on this whole debt ceiling thing that the politicians get it right. And what I want to suggest to you is that this time around, we've had many debt ceiling fights between the Democrats and the Republicans. I'll talk a little bit about that in a second. But with the problems that we've had in the bond market, it would be catastrophic, to put it mildly. I guess it's not putting it mildly, is it? If the debt ceiling, if they messed this up. Now, as irresponsible as Washington tends to be, especially with money, borrowing money, issuing debt, you know, the whole gig. I don't even think that they could be this irresponsible to allow the debt ceiling date to go by to where we don't have the money to pay all of our bills, and therefore we default, especially if we don't pay those interest payments on the bonds. To give you a little bit of a clear idea of how this works, let's say that you have a Visa card, and for every dollar that you spend on that Visa card, you borrow 50 cents. So we're talking about groceries, we're talking about everyday expenses. You're charging them, and because you got to have half of it covered by debt. Now, all the credit card companies told you you could live this way for the rest of your life if you wanted to. You could operate on an unlimited credit line unless we decide differently, that your credit limits is not going to go up. So you get to the end here and you're negotiating with the credit card companies. You've negotiated in the past, it's worked out, they've raised your limit. But now you're at the point to where you don't have hardly any money coming in from your job. You need the credit card to finance half your spending. And now you're going to have to pick and choose what you can cover through your small salary that you're getting and your big expense load. And then some things are going to go into default because of it. That's where we've been. There, in the past, there have been situations where, and it's all political theater. I guess that's why one of the things that is annoying about this story, besides the fact that this really gets the markets bent out of shape. It gets people nervous. It gets people stressed. Like the title of an article that I'm going to tell you about here in a second. It says, "Debt ceiling drama. We're in for a nail biter," and I do believe that we are. I believe that the politicians will take this up to the last minute, but I also believe that they'll figure out a way to meet in the middle, because these politicians do not want to have a collapse occur in the financial system. And my only concern is that these are some very intelligent individuals and very smart in their own right. I don't believe that they really understand how the bond market works, and that they're playing with a dangerous chemistry set where they've mixed Formula A into Formula B many times and nothing has happened, but it's solved the problem. Well, now, it kind of feels like they're reaching for Formula C to pour into Formula A and B because they may need it. But they don't really know if it'll blow up or not. But we're talking about the X date. The X date is the date when the Treasury would not be able to meet all of its debt obligations if the debt ceiling is not raised. And this could be as early as June 1st. So what this means is that there's money coming in from taxes, revenue coming in for taxes. They use that money, and then beyond that, they are out of money except for what's coming in. And when they've used up the money that's come in through June through May, and now they have to work from a balanced budget approach, which would mean that they only pay for things they have money, and they only spend money on things that they have money. There's no more borrowing. Probably the scariest thing a politician could hear, because that's all they do is borrow. So they have to pick and choose. If, for instance, they don't pay the debt service on a treasury bond, then they could default, and it would be worst case scenario. I, once again, believe they will pass a deal at the last minute. But they will get every little bit of political capital out of this. And this is another thing that's annoying. They take us through all this for the sake of politics. And so in case it does go wrong, see, there's two outcomes. It went very bad. It went very wrong. Something blew up. And they need to be able to have the political clout to say, well, it was the Republicans' fault because they wanted to reduce spending, and they thought more about reduced spending than they did you, the American people, and it's their fault. Or it's Democrats' fault because they feel like we have to continue to borrow. This has to come to an end. We have to get our finances in order and think about our kids' future. That would be the Republicans. But when it all comes down to it, and they get everything lined up, they wrap it in a bow, and they make it look like they both gave in, and they're both going to save face. That's what it's about. It's about saving face. So the markets, they were up and down today because of information coming out of Washington. But I got to tell you, in years past, while this has been going on, the markets went down quite a bit. And the markets are not really going down that much. I mean, the Dow Jones and the S&P 500 were down about 0.75%, not much. NASDAQ was down a little bit less than that. I believe Wall Street thinks this is not going to be a big deal. So that could be a problem if it does turn out to be a big deal or even smell like one. So there we are with that. But there's several scenarios that they can rely upon to circumvent this thing blowing up. The first one, there's 5 scenarios that could come about. The first one is they get a deal done. Last minute. I think that's what's going to happen. Scenario 2, Congress agrees to a short-term extension. That would be like you going to your credit card company and saying, well, we'll get back to that in a second. 1-877-913-5357. This is Bob Brooks. Stick around. I'll be right back.
The Word for Today is excited to announce the new official online home for the ministry of Pastor Chuck Smith and Kay Smith, PastorChuck.org. At PastorChuck.org, you'll have instant access to thousands of hours of verse-by-verse teaching by Pastor Chuck Smith from Genesis through Revelation, and full access to special messages on subjects such as prophecy and much, much more. Also at PastorChuck.org, a full library of great teachings by Kay Smith, and a section where you can read some of Pastor Chuck's books online, all free of charge. So visit the new official online home of the Word for Today and the ministry of Pastor Chuck and Kay Smith, PastorChuck.org.
Dr. Charles Stanley.
You've not heard me say that God hates sinners. He hates sin. He hates sin for the simple reason he understands fully its horrible, destructive impact on the life of his children. Therefore, God hates it. He condemns it.
The teaching of Dr. Charles Stanley on In Touch, helping you grow in Christ every day.
In Touch, weekdays at 12:30, here on KDKR.
Hi, my name is Bob Brooks, host of the Prudent Money Radio Show. So let me ask you a question. Do you know your numbers? Now, which numbers are those? They are your retirement numbers. That set of numbers is the single most important planning numbers you can know. Yet the majority of Americans don't even know them. Prudent Money Financial Services, sponsor of the Prudent Money Radio Show, specializes in figuring out those numbers and creating a game plan to make sure you're on the right track. Listen to the Prudent Money Radio Show weekdays at 3 p.m. on Bible School Radio 91.3. Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. 1-877-913-5357. I do have a line open. So we're talking about the debt ceiling, or America's credit line. Better way to say it, right? And talking about the scenarios if they potentially really screw this up. But we're not expecting that. The second thing that I think could happen if they don't and they probably won't get a deal done. I kind of take a little bit back of the confidence in that one. They can, if nobody can agree on it, they can extend the negotiations for a couple of months. which is crazy because they should be able to do this in such a way that they get it done by the deadline. But that's the second scenario. Third scenario, and this comes from Dr. Brian Horrigan. I want to make sure and give the author of this article his due. He's with Loomis Sayles. He's the chief economist. And this is from his article that he calls Scenario 3, Unconventional Challenges to the Debt Limit. Now, I have no idea how the market would react to this one. Here we go. Could you see this happening too? This is crazy. President Biden may choose to circumvent the debt limit with tactics like declaring the debt limit unconstitutional because it violates the 14th Amendment. Get this one. Or minting a $1 trillion coin, love to have one of those, that would be deposited at the Federal Reserve in exchange for cash. Only the Federal Reserve could take a coin that's worth $1 trillion and exchange it for cash. Can you imagine getting a $1 trillion, going up to your bank, flipping it there on the counter saying, hey, can I have a deposit slip for this? Oh, nothing surprises me, though. I bet you're the same way because it's just nuts. It's just stuff's going on that leaves you shaking your head, and you just go, what in the world has this country turned into? Scenario 4, no deal by the X date. Remember, the X date's when they run out of money, or they're relying on the money coming into the Treasury from taxes, but that doesn't cover all of their spending. Remember, they got to borrow to survive. And I think this one's really highly unlikely. But it says if the X date is crossed with no resolution to the debt limit, the Treasury would not be able to meet all of its debt obligations. The federal government would have to go to a balanced budget overnight, spending no more than tax revenues allow and undergoing a partial shutdown. The Treasury would need to prioritize payments, and they would have to pay debt first. The gentleman that wrote this article says that's his opinion. The Treasury can and likely would prioritize on-time payments on securities to avoid default. But in order to do that, I would think they would have to have major spending cuts if they were just focusing on paying the debt back or paying the minimum payment, so to speak. And because of that sort of solution, even though it's temporary, there's high odds that the rating agencies which rate our debt, of course our Treasury bonds are rated very highly, would downgrade the federal government due to perceived higher risk. Now let me explain this real quick. Don't give up on me quite yet. Let me explain how this works. We sell bonds to, I mean, if you can come up with a name, we probably sell bonds to them. Countries, companies, you name it, we sell bonds to raise money. So if I sell a $50,000 Treasury bond, say I sell it to China. China gives me $50,000. I pay interest on that money until the end of the term of the $50,000, and I give back the $50,000, and they give me back the bond. Everything's been fulfilled. If we need to finance our debt, which we will still need to finance our debt when all this is over with. That's the craziest thing about it, because they don't have a balanced budget by any stretch. We're just raising the credit limit so we can borrow more and have a higher balance of debt that we owe. Hope that makes sense. So we issue these bonds to create money that comes back into the United States to pay for expenses. But the problem is that now China says, well, y'all are a higher risk than you were before this debt ceiling situation. So we'll be glad to buy your bonds, but we need much higher interest rates to compensate for the risk. So nobody will want to buy our bonds or loan us money at current interest rates, and then interest rates will start to go up. If you want to, if you're watching for a sign that things are going south, that we're running into major problems, if you want to watch one thing, watch the interest rate. Just jot this down. Watch the interest rate on the 10-year Treasury bond. If the interest rate starts jumping up, what I mean by jumping up, when it starts to increase and go much higher at a high rate of speed, well, the markets will probably be selling if that's happening. That's a problem in the bond market, and it's a problem with the United States in accumulating enough credit in order to survive. So that's what you watch. You can go to CNBC.com. They'll have the 10-year interest rate or 10-year yield Treasury bond. You'll see it. And if it's green and it's up 5-6%, going higher, we have a problem. Of course, the last scenario is that we have a default. And like I said, I don't believe that's going to be the case. Boy, I certainly would hate for that to be the case. But at the end of the day, I think this is a lot of politics, a whole lot of politics. And it would not be politically acceptable if they allowed for the worst case scenario to happen, which is a major default. So I will keep you posted tomorrow, and we will catch up on what's going on throughout the day tomorrow. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. I love how this is always a trick of the White House. They come in as a third party, and they tell all the bad stuff that's going to happen if the Republicans don't wise up and do what they're told to do. Then the White House warns, here we go, stocks will drop 45% if U.S. defaults on its debt. I don't know where they. I mean, this isn't stock money managers and economists here that they're making these numbers up. I don't know where they get 45% from. I will tell you, it won't be pretty. But like I said, let's not get too far ahead of ourselves. Don't think that will happen, and we'll get through this like we've gotten through other debt ceiling debates and political fights. Now, having said that, we are, I think, slowly starting to face an opportunity, face a situation. Once again, I don't think it's this year, but face a situation where we will possibly default on that debt. And once again, that's worst case scenario. But I want to say one more time, don't feel like that'll happen this time, and we'll see what happens. Hey, this is Bob Brooks, and you are listening to the Prudent Money Radio Show. Let me ask you a question. Have you gone to the website, the new prudentmoney.com, joined the Prudent Money community, and got on the email letter list, and every time we post something, we send out well, we don't send out one every time. We send every time we send a blog, you know about it. When we send out our update that shows the 5 podcasts from the week, and you can pick and choose and listen to what you feel is most important to you. You get that in your inbox on a Friday. We don't bombard your inbox, so don't worry about that. But sign up and make sure that you are included, and we can keep you posted on what you need to know. We got a lot of cool things that are about to happen with Prudent Money, and I want to keep you posted. If you got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.